Okay. Hello, everyone. Welcome to the BingX Academy. It's me, Aziz, with you again. And today with me is Akil Stokes. I'm a trader and investor and the co founder of Tier 1 Trading. I know Akil for a long time since I've been with Trading View, and Akil was one of the before Trading View. Before I don't know if they have it now, but before they had that list of top traders of all time, and Akil was there for a really long time. I think until the time when they removed it, right? So, guys, this guy is a top trader. His ideas, his strategies, they work. I mean, almost all the time. But the way to become a successful trader is really tough, right? I mean, all of the paths to become any successful in anything is pretty tough, right? So it's a great pleasure to have you, Akil, and we really love to hear your story about about how you got into trading, about your success, and about any obstacles that you faced and how you overcame them. So tell us about yourself and how you got into trading.
Sure. Thank you for having me on. First and foremost, I love doing this type of stuff. It's fun to kind of just give back and hopefully inspire and motivate the next group of traders that are up and coming. And for me, I always learn something about myself as well. Um, I started trading back in 2007. Really, I knew nothing about investing, nothing about the markets. It was the next step in kind of my financial education journey. My father was really good at kind of just teaching me he wasn't an expert, but the basic things like, hey, like you should save money. You put it in a checkings account or a savings account, you get interest. And then I moved on to money market accounts and certificate of deposits and even bought some bonds as a kid. So when I graduated college, the next step, he said, hey, you should take a look into the financial markets. And I got involved in them in the stock market first and foremost. I fell in love with it. Obviously, I saw it as a way that I can make money, but I also fell in love with the game. It was interesting. It was uh, the puzzle of trying to put things together and make the right calls was kind of intriguing, and that kind of gave me motivation. And um, fortunately, I guess in hindsight, I graduated college at the time of the recession here in the U.S. So I couldn't get a job, a real job to save my life. So it provided the perfect opportunity to kind of follow my dream risk free. I said, hey, I found something I love. I found something that could potentially make me money and earn me not just financial freedom, but freedom of time. And I said, you know what, I'm going to go for it. I'm young. If I fail, I'll have plenty of time to rebound and try something else. And that's what kind of really allowed me to dive headfirst into the markets. And fast forward 15 years later was a very good decision. So I'm happy. I did all of the dumb stuff you can think of, which is probably what makes me a great coach now, because I can just tell you stories of dumb stuff I did. But all those lessons are worth it. No regrets about my path. Every kind of misstep is a lesson that I learned myself, a lesson that I can teach my kids, a lesson that I can teach up and coming traders as well. So very blessed to be where I'm at.
So you are, when you trade, you're not only telling your stories of your success, but stories of your failures as well,
Mhm.
right? So that the traders don't repeat them. That's that's good. That's good to know. So Akil, how was the trading so far for you in 2021?
Good year. Good year. Not my best year. Last year was a good year as well. Believe it or not, 2020. A lot of people look at 2020 as being, it was a negative year in a lot of aspects of
Yeah.
life, and obviously we're still going through that right now. But from a financial perspective, it provided a massive amount of opportunity, opportunities that I haven't seen in 10 years. So from an investing perspective, 2020 was an amazing year. 2021 was good. It started off well. There was a weird slow period in the end of the summer. I expect usually the summer to be slow, but we caught a really, really slow period between, I want to say, July and October, which usually in September markets start moving again. But we're in unprecedented times, so I don't know what to expect. All we can do is adapt to what the market gives us. follow our plan and try to limit our mistakes. So a solid year. I'm happy with it, and looking forward to another one in 2022.
Okay, thanks. Have you been following the crypto market and have you been involved in crypto trading?
So I've been following it more than I used to, mainly because many of the traders I work with are also crypto traders. For me personally, I'm not involved in the crypto market. It's nothing against the crypto market. I'm not a crypto market basher or anything like that. I'm just undereducated in it. So for me, if I'm not highly educated in something, I don't want to put any money at risk. But we do follow it from a technical perspective, looking for trading opportunities in the market. And I can tell you this, each market has a different personality. The stock market has a different personality than the Forex market. The Forex market has a different personality than the crypto market. But at the end of the day, technical analysis is the same. All charts move the same. They go up, they go down, they go sideways. They print the same type of candlesticks. Now, they may do it in a little bit of a different way. In my experience, the crypto market is a little bit more, how do we say this? I always call it younger. So it's
Yeah,
younger, it's a little bit more immature. And that's not a negative thing, but it means like the big moves are big moves. It's emotional, whether that's up or down. And, maybe from a low risk investor's perspective, that's a negative sign, because you don't want
right.
to have, 50% drops that'll
Yeah,
destroy you. But from a trader's perspective, that volatility, that emotion in the market, I guess, that offers opportunities. And if you're on the right side of the market, if you can analyze the market the correct way, there are some amazing opportunities in there. And the same technical analysis that we do in the Forex market is exactly the same as what we do in the crypto market.
they can be applied, right?
Mhm.
Um, so we've been talking about technical analysis, so I want to dig in, deeper into this aspect. And there is one thing really interesting in the traditional market, which is called correlations.
Mhm.
And correlations, are they real? And do you see a price movement correlation of any traditional assets to Bitcoin, for example?
Um, they're real, yes. Are they real all the time? No.
Okay.
And I think the thing about correlations is that people fall in love with them and they assume that because something is correlated, it has to do something all the time. So, you
Right.
get oil in Canada, something like that, where, people that will assume that, hey, because oil is doing this, Canada has to do this, or because the dollar index is doing this, the euro dollar has to do this, or because gold is doing this, Bitcoin has to be doing that. And the truth is that, correlations do happen. However, they do change all the time. So something that may be correlated 2 years ago may not necessarily be correlated now. So, you know, as a trader, I don't use correlations at all, because the chart is the main thing that will tell me all the information I need. Meaning, if I need any information about buying, selling, strength, weakness, where we're likely to go, I can have all that information on the price chart, the individual price chart. I don't need to look at a different price chart for that. Now, when
Mhm.
you go into more of the longer term investing perspective, so people that
Mhm.
are buying and holding for months, years, decades, that sort of thing, now correlations become a little bit more important, because you have those historical correlations, and you can make those long-term judgments off of it. So again, I'm not saying that correlations don't exist, but I think you need to be careful in falling in love with them because they do change all the time. Something that may be correlated in this moment may not be correlated in the next. And I think if that's the only kind of indicator you're using in order to make a buying or selling a decision, you're going to be in a lot of trouble.
Okay, understood. Thank you very much. And what were the best performing strategies for you in 2021?
For me, price action trading, I don't really kind of break down my strategies into different kind of categories. I consider myself a price action trader. Now, there are different tactics within there. There are advanced pattern trading, there's structured trading, there's trend continuation, there's counter trend, but it all involves price action. So reading a price chart and making a decision off of support and resistance levels, supply and demand levels, individual candlesticks, stuff like that. I would say the centerpiece of my philosophy personally is support and resistance. No decision is made in the market without support and resistance as far as trade entries, as far as trade exits, as far as stops. Um, but I would say if we had to split it up between, again, the price action trading and let's say like harmonic patterns, so Gartley's, BAT, Cypher, stuff like that, the price action side was better than the harmonic side for this year, personally.
for this year? Is it because of the it was mainly going uptrend, not sideways? Because um, what I know, I studied a bit, that harmonic patterns are best for the sideways, price action when the price goes sideways, right? Because it's harmonic patterns is a combination of corrective waves, right?
Mhm.
It's inside the corrective waves, and not the impulse waves that we saw, for example, in S&P, which was going, skyrocketing. Is that the main reason why they were not working?
Yeah, you're 100% right. And it's not that they weren't working, just the other things outperformed it. But yeah, you're
Right.
going to see majority of the harmonic patterns going to form again within sideways movements because of those corrective waves. So when you see directional markets, and you will see harmonic patterns within directional markets, but just the frequency will be a lot lower. So when we have directional trading in markets, you're going to
Mhm.
see less harmonic patterns, and you may see more failed ones. And I think that's something that's very important for traders to understand. And that goes back to what we talked about earlier about understanding the personality of your market. If you know you have a pair like, let's say, the euro dollar that isn't always that directional, it may be better to attack that particular pair with harmonic patterns versus if you have something like Bitcoin, who goes on these very directional runs. And
Yeah.
although it does consolidate, and we have seen a handful of harmonic patterns in Bitcoin recently because of that consolidation. But if
Mhm.
you're trading something more directional, maybe harmonic patterns isn't the best approach to take towards it because you know the personality of that pair, the personality of that cryptocurrency isn't suited towards that particular style. And that's something that a trader has to figure out. And that's something that a trader can figure out during back testing as well.
Okay. So it's something that you guys teach, right?
Mhm.
It's in your course, right? You also have a course about harmonic patterns, right? Yeah, correct,
Correct.
yes, of course.
Mhm.
Okay, that's great. Um, so is the chart pattern still valid when trading in traditional markets and cryptocurrency markets?
Oh yeah,
Sure.
especially harmonic ones are, yeah. Especially historic patterns. So your historic patterns, your double tops, your double bottoms, your
Mhm.
pennants, your flags, your wedges, your head and shoulders. My business partner, actually, I think it was last year, Jason Greystone. We looked at a descending triangle. We both took it in two different ways. I took it as a short-term trader. He took it as more of a long-term investor, even in two different directions. But that classic pattern was an entry reason for an amazing trade for him on Bitcoin. We also looked at a few pattern formations as far as channels and breakouts of channels when we saw that kind of that drop in that base happen a few months ago. So, the historic patterns are going to be, very prevalent in any market, and they're going to give the same clues. And that's why I say if you can understand how to read a price chart, if you can understand especially the historic classic patterns in the market, you're going to be at a massive advantage when it comes to analyzing any type of market.
But of course, it's very important to know how to identify those patterns, right?
Mhm.
Because not every triangle that you see on the chart is actually a triangle pattern, right? I've seen a lot, follow some traders who, publish their, ideas and their charts when they draw it. A triangle,
Mhm.
whenever a triangle is actually another corrective wave based on the Elliott wave theory, and where you can see that the formation of impulse wave was not finished, and the triangle could not be there, right? So whoever is watching is, look, guys, if you see a triangle, it might not be a triangle. You need to learn from the essentials of the candles, candles, and first of all, Elliott waves and its formations, because not every triangle you see on the chart is actually a triangle pattern, and it's not every flag is actually a flag. It takes time to learn. It takes time to practice and to backtest and to learn to understand this pattern. But if it's still valid, and you said that if it's still good, so chart patterns are still one of the best strategies to learn in not only in traditional and forex market but in cryptocurrency market, right? And you
Yeah.
gave a good example. You gave a good example about your strategies and you guys that you know made a successful trade.
Yep. Yeah. They're going to be valid. I love what you said. It's, I was like saying this, it's, the what isn't as important as the where. And I think a lot
Mhm.
of newer traders, they hear stuff like head and shoulders and triangles or whatnot.
Yeah.
And, they run a YouTube search, they find examples. It's like, hey, this looks easy to find.
Yeah.
And they go about practicing it. And that's important. You do need to practice identifying it. But as you mentioned, the overall analysis is what's more important. There's going to be a lot of triangles on your chart that you're going to see, but only a handful of them are actually going to be relevant. Right? Only a handful of them are going to be actually at a location that is needed or preferred for you to take a trade in a certain direction. And the market likes to debate a lot of people into doing that. It likes to give them these formations and
Yeah.
get them all excited only to take them in the opposite direction. So just the warning to you guys out there, it's good that you're studying them, but don't just think you can learn what this thing is and then trade every single one of them. There has to be very specific ones that you trade. And a lot of that is based on your overall analysis, not just the analysis of that last thing.
Yeah. Correct. So, taking into account whatever we said, can we say that trading should not be based on technical analysis only? Do you agree?
Um, I'm biased technically, and I
Mhm.
think we need to be careful and make sure we understand there's a difference between trading and investing. I believe that as far as trading, I believe in technicals 100%. I think you can be a successful trader trading 100% of the technicals in trading. I think fundamentals are more driven towards longer term investing. Most fundamentals in the market are complete nonsense. Um, either they're pointless or they're manufactured to get people to do certain things. Now, with that being said, right, if you understand both, it certainly gives you an edge, right? And this is
Mhm.
kind of more going to the investment side, but
Yeah.
let's say you understand the fundamentals of Bitcoin, and let's say you have this fundamental backing, whatever you heard or saw fundamentally, or whatever correlation you made gives you a bullish bias as far as Bitcoin. Now you have that bullish bias. When you can add the technicals to that, think about the technicals as being like the actual target of like, okay, I know I want to get bullish. This is the signal, the sign that I was looking for in order to get bullish. Now
Yeah.
you could put those two together and be even more powerful. So I always call those home run trades, right? Typically in my trading, I'm in and out pretty quick in the market, right? I'll see a technical setup, a technical signal. I'll get in, I'll get out at the first sign of danger, and then boom, I'm done. During the home run trades, what I'm doing is I'm combining the fundamentals. So maybe there's a fundamental announcement on the horizon that I feel is going to be beneficial towards a bullish position. Now, all of a sudden, if I get that bullish signal and that aligns with the bullish bias I have from the fundamental side, that allows me to be more aggressive with my targets. And maybe instead of getting out right here, I allow it to ride and catch the bigger move. So they can certainly be used together. I have a technical bias. So I'm always going to favor technicals massively over fundamentals, but they can certainly be blended. I just think
Mhm.
as a trader, especially as a retail trader, if you're going to try and trade off of fundamentals 100%, I think you're going to be in a lot of trouble. Um,
Okay.
that's very difficult to do.
But the combination they can use it, right? The
Oh
trade
yeah, yeah.
technical from.
Yeah, I think it's just important. If you're going to use a combination, just make sure one is the centerpiece. So one has to trump the other. So it's like,
Yeah.
know what's more important. If fundamentals are more important, you know that, hey, my bias is set off of fundamentals. technicals
Yeah.
are adding a layer to that. Or if you're, hey, my
As-
bias is technically and fundamentals add a layer, just have a bias so you know which is more important. That way you're not confused, because there are going to be a lot of times where maybe the fundamentals say one thing and the chart says another thing, and now
yeah.
you're kind of in between. You end up making the emotional decision. So,
So you have to have one strategy, your primary strategy, and use others as a supplement, right?
yep,
As a supplement to your decision.
yep,
But what about some traders trade on based on the news?
hmm
Is it good or bad? So, for example, NFPs
hmm
rolling out in 2 or 3 hours. They long US dollar
yep.
and short Euro USD. Is that a good strategy? You think?
I don't think it is. I think it's more of a gamble. Now, again, if someone is very educated, if they have a fundamental bias and they're educated on the situation, and maybe they can make that call. I think it's more of a crapshoot. I think the news is. I don't short term. I don't think it's a good idea to try and predict the news, because you're not really predicting the number that's going to be known. You're predicting the reaction to the number, which is always a little bit difficult. And then that's not even
Yeah,
taking into account a lot of the funny stuff that happens behind the scene, where you know I don't want to call them market manipulators, but smart money knows what people are doing. Smart money knows that we're driven off of greed and fear. So it's very easy for them to manipulate whatever they want us to do. So if they want something to sell, they can set it up so it makes it look one way, and then we do another thing, and they can take advantage of it. So you got to be very careful of that. So I personally don't think it's a good idea to trade the news. I think it's more of a gamble. But hey, if you're someone that has an edge, and that edge is created by, maybe you have a source or a news outlet, or you're just extremely good at predicting these things, then it's certainly possible. I don't want to say anything's impossible in trading, but especially as a newer trader, I think it's better to kind of just sit on your hands and wait until the dust settles.
right. So before, I would say like 2 or 3 years ago, in cryptocurrency market, the cryptocurrency market in general, especially Bitcoin, was very very the price movement were based on the news that were related to and there are some softwares which read Reddit and Twitter for Bitcoin and any wording they have the core semantic core which reads the positive and negative words and they come out with the prediction um, and right now you don't see that much. You see that someone said that some investor or any bank said that we will be using Bitcoin and stuff, but it's still the price is not reacting. Is that a sign that cryptocurrency market is becoming similar to what traditional market is? It's becoming less manipulative by the news outlets. As you said before, it's young, it's pretty young, but is it one of the signs that it's getting like older?
I think so. And I saw the same thing with forex. I got into forex when it was relatively a new market as far as retail traders. Late '90s. So I got involved 2007. So only about maybe 10 or so years in. And I think we're seeing the same thing with. I think we're going to see the same thing with cryptocurrencies, where at first it's really emotional, and it's really emotional because everyone's in it. Everyone thinks it's a get rich quick scheme. Everyone thinks it's their kind of path to being overnight millionaires. And you see a lot of immature people investing, and therefore you see a lot of immature moves where you see the market's jumping after every
Yeah,
single release that comes out.
yeah,
And I think as the market naturally flushes more and more of those traders out, because a lot of those traders are going to end up doing dumb stuff. They're going to go broke. They're going to go, find something else to fulfill their dreams. And what you're left with is more educated traders. And I think those more educated traders aren't as quick to jump on kind of the first bit of news that comes out. I think they're more educated in their analysis. So I do think you will see it settle down, where I'm sure there will still be news events or statements that come out that cause it to spike. But I think over time you're going to see less of the massive movements and more of a steady flow. And I personally think that's a good thing. I think that's a good thing when you see more of a steady flow, because it's going to limit some of that risk. Everyone thinks about the news event coming out for good news, and you get these 30% rallies in a day. But you've also got to remember there's bad news as well. You can have these 50% drops in a month, and to limit that, I think that's a lot more important than anything else.
Okay, thanks. Any forecast for 2022? Some experts say that this year will be tough. Next year will be tough. 2022 will be tough, and some even say that we might face a steeper downtrend in the global economy. Do you agree?
I don't know. I wish I could forecast the future. If I did, I'd have a lot more trades on right now. Economic policy is going to be interesting, because if you would have asked me, I probably was asked this last year. What do I think about 2021? And I assumed we'd be out of a global pandemic, and we're still in it. And are we going to be still in it in 2022? We're going to at least start. And I don't know how things are going to go, and I don't know how that's going to affect monetary policy and what's happening. So, I'm not sure. I think it will be a difficult year because we're still dealing with the unknown. I still don't. We're not on a. We're on a decision-making cycle where every decision is being based off of, not every decision, but a lot of decisions are being based off of this pandemic and what's been happening. It's very reactive. We've even seen that in the US, where we've said one thing for 6 months, and then all of a sudden numbers spike and we change right away. And you'll see that across the globe with different economies and different countries kind of piggybacking off each other. So everyone's waiting for Canada to do something. And then once Canada does something, everyone else feels like they have permission to do it too. And all of that's going to be based on ultimately how this pandemic goes. Do we go back into lockdown? How does that affect the economy? Do jobs rebound? So I do think it will be a tough year, because anytime you get kind of fundamental based uncertainty, you get more sporadic markets, like we talked about. You get news events that come out and all of a sudden, boom, this, boom, that, that emotional quick reaction. And then we see a reaction backwards when it's like, oh, this happened. And then like a week later, it wasn't that bad. So I think it's going to be difficult. I try to take it day by day, and not focus too much on the longer term future, just because a lot of it is just it's very hard to predict, because we just don't know. We just don't know.
Okay, so we basically, on whatever news we read and the economic data which come out, we are not going out of the pandemic in 2022.
No, I highly doubt it.
Still, the market is unpredictable, right? The rate change that the federal reserves are making, and it seems that we still will be, with some restrictions, we won't be out of we won't be back to the pre-pandemic years, right? It's going to be a year where we still be fighting for it, but not out of it, right?
Yeah, hopefully.
Okay.
I would have said I thought we would have been out of it this year, and we end up being in a worse situation. But
is the market be sideways, you think?
Depends on what market. The forex market is going to be, well, I don't know, actually. No, usually the forex market is more naturally the forex market is more sideways to begin with. I do think with the different monetary policy changes that are supposed to come, you may see some directional markets, especially in the first maybe 2 quarters, first half of the year, first quarter at least. Crypto, I don't know. Crypto's been, again, I've only watched Bitcoin and Ethereum, and it's been strangely consolidative to end this year. I'm used to more directional movement, and we saw some retracements and some consolidations, and we've thought, hey, we're going to see the next wave up after this. And they've kind of just been stuck in that rut, not really
Yeah.
reacting to anything. So, hey, who knows? It might be a consolidative year for cryptocurrencies as well. Um, I don't know. It's going to be interesting.
So we will, if that happens, we will see harmonic patterns play.
Oh yeah, yeah. We've seen a few already. I've seen more in the last I'd say probably 3 months than I have in probably the whole year before. Just as we kind of collapsed and then kind of just based off at that bottom. So if you have a consolidated strategy, whether it's pattern trading or just support and resistance, it could be a good opportunity to kind of nibble and get these quick bites in and out of the market. At the same time, I'd say I would still, if you have a long term bullish bias, set yourself up for positions where, hey, I can maybe take a partial position off for a small move, but if I'm in a bullish direction, hold on if that big move were to come. 'Cause I think when we do pop, it's going to pop. The longer we stay in consolidation, the bigger that extension is going to be. So it's just a matter of time.
Eventually, it will be. One
Yeah.
day it will. So we
When,
will
who
see
knows?
Bitcoin, but we will see Bitcoin at 100K or 200K, whatever.
Yeah, there's room. There's room. There's room. It's just a
There
matter
is still
of
room for growth.
when, and I think when it happens, I think it'll happen quick. Um, so
Right. So it will be like a very high, strong impulse wave right straight to it, right?
yeah, I think so. I think so. With the amount that we've been consolidating, contraction leads to expansion. You would think. Now, what's going to cause it? I don't know. I don't know if something's going to come out or if it's just going to be, who knows? That's the tough part. But all you can do is if you're a trader, you analyze the chart every day. You wait for the signs. You don't have to be first in. You just don't want to be last in.
Okay. So I'm buying. I'm buying Bitcoin right now. Do you think cryptocurrency trading will be as public as widely used as stock trading? Are cryptocurrencies going to evolve in the manner where we will see banks and brokers offer crypto trading and stock trading at the same time?
I don't know. I think some. Um, I don't, the crypto market is interesting because it's still it's a lot of speculation in that market.
Mm,
So, for me, I still don't see there's not a very strong foundational value in crypto. It is the speculation that, hey, this will become something. And what I think will happen is I think you'll see kind of just like we talked about traders in the crypto market. I think we'll see a lot of the exotic currencies be shaken out as people start to see that, hey, I was in this for this get rich quick thing, but there's no real base under it. And I think you'll see a handful of strong ones survive. And I think they will be actively offered. I think as they continue to gain in popularity, it's only, it's only a matter of time. The banks see a chance to capitalize off it, they'll take advantage of it. I just don't think you're going to see, it's not going to be a million different coins or anything like that. It'll be probably a strong handful that make that break, and the rest are kind of shaken out.
and the rest, they will still be there, in the market, but not widely used by
Yeah. They'll still be there. Yeah. So it's same thing as, you can look at the Forex market, for example, where, there's 30 main pairs, I guess you can say, and there's a few more, but out of those 30, there's probably about 5 or 6 that the majority of people are interested in.
Right.
So and that doesn't mean that there won't be opportunities on the others. In fact, I would say that some of the more exotic ones, they're actually better to trade than the popular ones, because the popular ones aren't as or the popular ones are more manipulated. And you may see the same
Yeah.
thing with cryptos as it gets more kind of mainstream. You're going to see banks offer it. You're going to see banks have interest in it, and once banks have interest in it, they're going to start manipulating it for their own. And I say manipulation not in a negative way, but they're going to be involved in it.
Yeah.
So there's going to be more false moves and kind of fake outs and stop hunting and stuff like that. So you may actually see the path of least resistance be on the more exotic ones that the banks aren't paying much attention to.
Okay. And for let's say in the development of cryptocurrency market, and let's say Bitcoin and now Ethereum, more and more banks are trying to use it,
Mhm.
trying to add Bitcoin trading ETFs or futures and all this stuff. And some say for cryptocurrency and Bitcoin is a bad thing because of these manipulations. And there is still a thing in the blockchain and cryptocurrency industry is decentralization. Is that they want to stay away from giving this opportunity to large cap investors. But just your idea, is it a good thing when major banks they adopt Bitcoin trading, or is it bad?
I guess it depends. It's interesting because, like you said, I mean, the main idea behind starting these cryptocurrencies were to get away from the banks and to
Right.
have something that wasn't under their umbrella. So it's kind of hypocritical if big banks do adopt it, because now the whole point of something that's not, I don't want to say not regulated, but not regulated by big banks and whatnot, is now under their umbrella. Um, I think it's a bad, it could be a bad thing if you're someone that is involved in crypto for that aspect. Meaning, if you're kind of, more personal reason, like, hey, I like it because it's an alternative that's not corrupted or manipulated or stuff like that. If you're just a trader, it gives easier access to it. Um, I think it could be a good thing if it's more mainstream, because there's more availability to trade it, and maybe there's even, if you're someone that's worried about safety, um, there could be a little bit more safety in doing that as well. So I guess it depends on where you fall in that line of, hey, are you just kind of selfishly trading it to make money, or are you kind of a believer in the bigger story and bigger idea? Um, Ultimately, I do think it is kind of hypocritical if, if banks do start trading it. Um, it but I mean, who knows? It seems like we're on that path as it becomes more popular.
But with such adoption, we will get volume, right?
We should,
Um,
yeah, and
we
that's
should
that's what I think is good for trading. The more volume, the more volume without,
the
crazy amount of volatility.
liquidity, right? The
Yeah.
liquidity, and then it's good for trading because in that case we will see waves, right? We will see opportunities for long and short. We will see the ups and downs, and not only one wave which never ends, and or the one that goes down which never ends, but there will be a great opportunity for it, and we will see patterns, right? For those who actually study chart patterns, they could see patterns and not only one stick upwards going upwards.
Yeah, I no, I agree 100%. And like I said, yeah, I think from a trading perspective, I think it's a benefit, because that, we need liquidity.
Yeah,
The more liquidity we have, the better, because it's going to offer opportunities. When we have no liquidity, it's, maybe you get lucky and hop on at the beginning of that wave and you catch it, but if you don't, you probably miss it. You don't have an
yeah,
opportunity.
yeah.
So I do think that could be a benefit, yeah, for those who are interested in trading, as long as, personally, you don't care about the whole, like, big bang thing, if you're not against them and stuff like that.
Okay.
Some people are. So it's like, some people are.
Some
I'm
people are,
I'm
yeah.
just selfishly in the market to make money, and I can care less about big banks, or even, when people talk about the markets are manipulated. It's like, hey, okay, we can say the markets are manipulated, but it's not personally to get you. It's just, are you going to be on the right side? Are you going to be skilled enough to not be the dumb trader that gets caught in the
Yeah,
manipulation?
yeah,
Be a winner.
yeah. So you have to find an opportunity in any ways, right, in the market, and there is opportunity, right? You need
Mhm,
to learn. You need to learn, and you will find your way,
mhm.
even if the market is manipulated, right? You will find your way.
Yep, yeah. My one of my trading mentors always taught me, he said, winners win. That means, no excuses, because excuses don't help you. Maybe they make you feel better, but they don't push you towards success. So you find a way to win. Don't complain. You find a way to win, and that's how I've adapted that to my life and my trading.
But do you have to build that psychology through the time, though? The winning mentality, do you need to build it, or do you, are you born with it? How does it work?
Um, I think you do have to build it. I think some people have a little bit more of it in them, and that can come
Mhm.
from, you know, their whole journey in life from when they were born. So, for example, I was an athlete my entire life.
Ah,
So I've been in locker rooms since 4 years old. So we always win. You find a way to win, no excuses. Like that's in my DNA. So it's like, coach doesn't care if you make an excuse. You find a way to find a solution to the problem. But that it can be learned as well. And psychology and trading is tough. It is something that it's not going to be learned. You can learn about it through a book,
mhm.
but it's not going to be actually learned until you deal with it. So I
Right.
think the best thing a trader can do is, you read about it in a book, you kind of understand what your mindset has to be. You surround yourself and talk to others and hear their war stories, so you're kind of prepared for it. But there's no substitute for actually being in the market, getting your butt whipped, and kind of like figuring it out and bouncing back. And you get stronger each time, but like it's gonna hurt. It's gonna hurt in the beginning. So
It's
just
gonna.
accept it. Don't run from it. You're normal. We've all been through it. Just it gets easier. I promise. It does. We still
It's
deal with
right.
it. But it gets easier.
And psychology is actually one of the main reasons why many traders fail, right?
Yeah.
And psychology is actually why trades do, they do dumb stuff like, counter trading or counter positioning. So when they open a long position and it hits the stop loss, they say, "Oh, the market is going down." They open the short position, and it reverts and goes back up. And you need to learn it, right? There are books, there are courses which you study, but I think that you need to, in order to improve it, you need to go through it, right? You need to, when you see that your trades are not going well, you need to, how somehow digest it and then, relax and meditate, whatever. But you need to go through it to experience it, right? And to learn it, to actually build that skill. It is essential to go through it. It's
Yeah. You're 100% correct. I couldn't have said it any better. It is. You got to go through it. You got to be able to. You got to have tactics to identify it. Know
yeah,
when you're in a position where you're about to make a mistake, and do something to avoid that position. Because I don't think that most traders are actually bad at trading. I think
no,
most traders are bad at psychology. So it's like you said, where it's like,
yeah,
hey, I spoke to a guy the other day. He was like, yeah, man, I keep winning, I do well, but then I give everything back. And I think most
uh,
traders are in that boat because they can't help themselves to not give stuff back, and then that leads to a handful of other mistakes. So you are dead on. You are dead on. I said it better myself.
you've been through it, right? And you developed
Oh,
this.
yeah. I still go through it. I just know how to handle it. But
Uh,
yeah, I've been through it, so I can give tips on how to deal with it, and that's helpful. But I tell people this, right. I've made the mistakes, and you're probably still going to make the same mistakes I've made. Hopefully, you only make them once because you're warned about them. Where during my journey, I was stubborn and hard headed, so I do the same dumb mistake like 10 times in a row before realizing, like, oh yeah, we better stop doing this. So, but that's me being stubborn and blaming everything else. I'll make a mistake, and oh, it was the broker, oh, it was the market, oh, it was the tweet,
yeah,
and then eventually it's like, oh, it was me.
yeah,
But you never want to blame yourself first, right? Why blame yourself when you can
of
blame others?
course. Yeah, yeah. And when you start realizing that it was you, that's the first step to handling your psychology, right? That's the first step of developing that
Yeah.
psychology, and that's good. Um, which assets should be watched closely in 2022, you think, and which will be the most volatile?
Ooh.
Yeah.
I still think crypto will be the most volatile. Um, I'm interested in a lot of individual stocks. I think, and I'm ways away from my stock investment years, but I always want to get back into it on more of an individual investment basis. But I'm very interested with you know, the jumps in technology that we're seeing are they're happening so quick. You know, we started off by making these kind of, you know, a handful of jumps in this much time, and now we're making massive amounts of jumps in this much time. And I'm interested in kind of the virtual space. You know, with Facebook going to Meta and kind of the idea. You know, me and my wife watch a lot of movies about like the future and stuff, and I'm telling her, I'm like, all this stuff we're watching, like it's gonna happen, it's gonna happen. So building out these virtual spaces and basically having a an upgraded virtual world. It's gonna be interested on who's going to take advantage of that space, because I think it'll be kind of like a gold rush, where there's all this opportunity available, and there's going to be a handful of companies that are going to be very good at taking advantage of it. And I think that, you know, it's at the very beginning still. And if you can find a company that has a positive long-term outlook and hop onto it now, I think there's a massive amount of opportunity there. So the tech space is interesting to me just because it seems like we're on the horizon of the next big jump, in my opinion. So that'll be an interesting watch.
So you go for stocks.
Stocks, yeah, there we go. Well, that was a long-winded, long-winded way of saying stocks. I still think crypto will be more volatile. I think the stock market is interesting though. Forex is kind of it's going to be it is what it is. It's the steady Freddy. We go up, we go down. Lots of opportunities still, but it's you get what you get in forex. Put it that way.
Okay. Yeah. Cryptocurrency market. Um, I don't know. It's for me from observations that I made. It's really like an interesting market. It goes for sometimes it goes sideways, and you might there is an indicator just like in the stock market. Fear and greed. You see it going sideways, and then all of a sudden it starts skyrocketing. Do you think something we might see next year as well? Right now we see it going down. We see it going sideways. Rather than doing all these upside moves. And somewhere by seeing one of the moves, which was like an impulse looking, some said that we will see 100K by the end of the year. One of them was me, probably. Actually, I did. I actually did, and that didn't happen. Do you think next year, though, when the market regains its power, and we all out of the holidays with with enough power to push it to 100K?
I do. I think we're overdue. I mean, if I don't know if I said 100K, but I would have been on board with you as far as like just what we've seen historically in the market is we've seen periods of consolidation and these massive expansions, and on Bitcoin specifically, I mean we've been consolidating or we've retraced and then we've consolidated for a while, and we haven't seen that expansion yet, and I think we will. I do think we will. And when we do, it's going to be massive. You think about it from a psychological standpoint. There are a lot of people there's always a lot of people that want to invest, and they're waiting for the next kind of big dip or whatever to get involved. We're sitting at a previous level of support right now, and when it goes up, it's going to hit headlines just because we haven't expanded in a while. And we're going to hit headlines, and you're going to see a lot of smart investors that are already positioned be able to take advantage of it. And then you're going to see a lot of the general public that once again is going to feel like they're late to the party. And I think that's going to push it up. So I do think we're due. Again, I thought we would have been due earlier than when we are, but that's the markets for you. But yeah, I do think we're due for an expansion, and I do think we're due for one of those big impulsive waves. We haven't seen one in a while.
Okay, that's really you cheer us up because some of the traders and some of us who are like cryptocurrency believers and Bitcoin believers, we were like, man, it's going down, it's going back down to whatever, to 3,000, to zero, whatever. But with such adoption with institutionals and with the banks, I don't think that we will see like a massive drop to 10, to 5 or anything to even to 20, which is, I don't think that is possible. We cannot say that anything is not possible, but, drop to 20K is something I think is far beyond something that would happen.
Yeah, I
Where,
think so too. I think there's a massive support level at around like 30 or something like that. I think
yeah,
that would be very. I think that would be very difficult to break. I think you'd see at that cheap, you'd see if you'd think you'd see a flood of buyers
yeah,
going from what it was basically 70 to 30. But yeah, you never know. But yeah, I think we're due. We've been holding pretty steady, and if there was a massive amount of selling pressure, we would have sold off by now.
by
It's
now,
been
yeah.
holding, so you got to think there's a lot of accumulation happening, and we're due for a markup.
Yeah, that's good. That's good to hear. So, Akil, we would like to move to the. We received a lot of questions from our
Mhm.
community, and if you don't mind, can we just jump? The first question is from GLA Fighter One. Is portfolio diversification is a good strategy?
Yes, I think it is.
Mhm.
I think balancing your equity curve is key. So managing risk, right? As traders, first and foremost, we are risk managers. So
Okay.
the more diverse of portfolio you have, the better you can manage your risk. Meaning that it could be portfolio of pairs, it could be portfolio of strategies, it could be portfolio of markets, it could be all three. But the more things that you have, or the more things that you're doing, is going to provide its own safety. Because hopefully, if you set it up the correct way, when something is going well, it's going to make up for maybe something else that isn't going too well, or when something is just not offering opportunities or just stuck, maybe you'll have something else. So we talked about harmonic patterns earlier, right? So harmonic patterns typically come in periods of consolidation. So when the markets are consolidating, my directional strategies aren't really offering opportunities. So I'm just sitting there doing nothing. But
Yeah.
now I have harmonic patterns and vice versa. When we're directional, harmonic patterns may be getting beat up. I have something else to take advantage of it. So I do think diversification is key. I think it's a really good risk management tactic.
Um, Diversification is key, right?
Mhm.
And risk management is one of the one of the key aspects of trading.
Correct. Yeah. As traders, we are risk managers. That's our
Yeah.
number one job.
Okay. All right. Question two is from John Rister Hoyon. Hope I read it right. As a new trader, it's hard for me to read charts. What are the basic indicators you can suggest to start with?
Price, not really an indicator, but start with price. I would start with a chart. You want to learn the foundational elements of trading, and it all starts with price action. It starts with reading a price chart. Even when you're going to move on to indicators, understand that every indicator is built off of price action, right? So the better you understand price action, the better you understand your indicator when it tells you and how you can use it. But I would scrunch up your chart really, really small, so you get kind of a zoomed out view, and just start practicing measuring the ebbs and flows of a price chart. So how price wiggles and waves and goes up, how trends are created, stuff like that. Understanding, what consolidation is when we go sideways, what expansion is when we go directional. If you can start with that, that's going to be massive. If you want to do something that will help you identify price and the swings, you can try like a zigzag indicator. You can put a moving average on as well. That typically helps out the eyes a little bit, so you can kind of
Mhm.
see, when that moving average is sloping up, bullish trend. When it's sideways, consolidation. When it's down, bearish trend. As you advance, that's not always the case, but I think as a beginner, that's a good way to get started, just on kind of the basic aspects. I would say this is important too. This is very underrated. Learn how to read a candlestick. A lot of
Yeah.
people see candlesticks and they see, hey, bullish candle, bearish candle. Bullish means up, bearish means down. Um, the candlestick actually tells a fantastic story when you take the open, high, close, low into account. And not to get too deep into it, but what you'll understand is that once you start learning candlesticks, is that not all bullish candles are actually bullish. Not all bearish candles are actually bearish. We can have a technical bullish candle that I see as a very bearish signal based on, the length of the wick, based on the location of the close. And once you can understand those concepts of what an individual candle tells you and understand the story, you're going to see the markets in a completely different way. A completely different way. Trust me, it's something I didn't add until later in my career when I started going backwards and relearning the basics. But it's powerful, 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 powerful.
I mean, you almost opened, you opened my eyes. When I was listening to it, I was saying, like, what do you mean? What do you mean the bearish cannot be bearish? I mean, you see a gravestone doji, how
Mhm.
it's not, how it's not going the other way, how it's not going down, not up. So it's basically, when you look at when you look at the candle, you
Mhm.
don't just read the pattern itself and its name on the web and its definition, what it means, right?
Mhm.
You just There is something that you need to understand what happened during that hour or during the day if you're looking at the daily chart, right?
Yeah, like it'll tell you a massive story. I mean, if you can imagine a candle, visualize a candle where it is a bearish candle, and has a long wick to the downside, and the close is somewhere in the middle, right?
Mm.
I think your average trader will look at that and be like, oh, it's a big bearish candle, that's a bearish sign. Well, it's actually a bullish sign, because at one point the bears had so much control over that candle that they were pushing it down and couldn't be stopped. But before that session closed, right, because of that, we noticed because of the wick, before that session closed, there was buying pressure because that candle was able to get sucked all the way back up past the midpoint. So
Yeah.
that's a clear sign where I think a lot of traders will see that and be like, oh, I got to get bearish next because I can't miss the move. That's a
Mm.
sign that, hey, that you are, like, if you get involved, you're late,
Yeah.
because those bears found a place of rejection. They found a place of buying pressure. They were punched in the face and beat back up. The buyers won. Maybe they didn't win the entire session because it was still a bearish candle. But if you now enter a short right after that candle, you're going to be in trouble because you're selling right into buying pressure. And that's the type of, again, manipulation that
Mhm.
happens in the market. I hate calling it manipulation, but it's
It better describes it, right?
yeah,
It's the best term.
it's the best term. I just don't want people think manipulation is being negative. It's not like someone, breaking into your account and putting fake prices. It's just basically the market tricking the non-educated or undereducated traders into thinking one thing when it really means another thing. Um, so we'll look at candlesticks like that and be like, even though it's bearish, we see it as a bullish signal. And of course, the location of it matters as well. But I think if a trader can understand that, it's gonna open up a whole different perspective and of how they view a price chart. I think it'll give them a much bigger advantage when it comes to entries as well.
Right. Okay. So moving average, price action, and candlesticks
Mm.
to start with.
Yep.
Okay. All right. And then from Rudy Hartono, how many hours is the normal time for a trader to trade in a day?
Well, good question, Rudy. There is no normal. Trading is all based off of your lifestyle. So if someone wants to be an active day trader, I know some active day traders that trade 5 hours a day. When I day trade, I look at a chart for 2.5 hours a day. I work with some traders who look at a chart for 10 minutes a day, right? They trade something on the daily chart where they come in once a day. They've got about 20 pairs that they scan. It takes them about 10 minutes because they're looking for a very specific signal. So it's yep, nope, 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 yep, nope, 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 boom, and that's it. I would say for my swing trading analysis of higher time frames, 4 hours and up, it probably takes me anywhere between 15 to 30 minutes each day to do my analysis and kind of know exactly what I want to attack and what I don't want to attack. So it all varies. It depends on what type of trader you want to be. I would say this as a newer trader, understand that there's nothing mandatory. Um, I would suggest that you base your trading around your lifestyle. So if if you have time to actively watch the charts and you want to throw in a few hours to do it, that's fine. If you know you have a job where you can't really sneak away and be at a computer, adopt a higher time frame strategy where you can do your analysis maybe in the morning before work or at night after work. You don't need to actively watch something aside from maybe every hour, every 4 hour to take a peek at it. But the cool thing about trading, and this is what attracted me to it with the time freedom, is you can literally fit it to, you can choose a style that can fit whatever you want your lifestyle to be. And there's not many jobs where you can do that.
All right, I hope you got his or her answer. Next one is from, uh, I will try to read it, but if I pronounce it wrong, I'm sorry. It's from Russ Terj Poyon. Sorry. Aside from BTC, which other cryptocurrencies you do like to trade, and what kind of time frame are you normally trading on? Fast trades, few minutes, or longer term holds?
So for me, my market is the forex market, so I'm not a crypto trader, but we'll look at Bitcoin and Ethereum. We'll look at it on all time frames. Really, it's catered towards whatever trader I'm working with. But typically, I'll do top down analysis from daily, 4 hour, hourly. I don't think we've done a lot of short term, short time frame trading on any of the crypto. So usually, I would say anywhere between the hourly up to the daily.
And the last question is from Didik Sis. As a beginner in futures trading, what leverage do you recommend? Cross or isolated should I use? And what percentage of my total assets do you recommend for me to use in futures trading? See if you
Um,
have, right.
I would say this. You take what you get with leverage. It's going to be different rules no matter where you go. My bigger opinion on leverage is that leverage doesn't really matter. And I had these conversations a lot when a lot of the leverage rules got switched up from, back when I first started trading, you can get like 200 to 1, and then, we went to 50 to 1. I know places are 30 to 1. But here's the thing. If you have adapted a good risk management and money management strategy, you're never going to use all your leverage, right? The only time leverage is going to get you in trouble is if you're over trading, right? If you're trading too much, if you're risking too much, that's when you're going to get in trouble with leverage. If you're trading with a good risk profile, that leverage isn't going to matter because you're never going to be in a position where you're going to use it all. So it doesn't really matter. Well, I would say this: I wouldn't worry as much about leverage as much as I would worry about your risk management tactics. Now, as far as your percentage of your total assets, do you recommend you use in trading? I would start small. And the cool thing about trading is that it's one of the very few businesses that you can learn without the risk of losing anything. So it's not like a brick and mortar business where you've got to invest stuff for a startup and you've got to go through your bumps and your hurdles while actively losing money. With trading, because there is demo trading and paper trading, you can actually invest, your 6 months, your year, your 18 months, and that's what we typically see. It takes traders to become successful at 18 months. You can invest that time and learn without actually risking any money. So I would start with zero risk, or zero percentage of your total assets. And then I would say, as you improve, treat yourself like a prop firm. All right. So, once you get out of that demo phase and you feel like you're ready to trade, start with a very small percent. And then as you improve over the years, give yourself maybe, an evaluation period of 3 months or maybe 6 months. And once you've hit certain goals, not profit related goals, but let's say process related goals where you're trading well, you're not making mistakes, then you can add to how much you're actually allowed to actively trade in the markets. So start with absolutely nothing. And then build up from there as you gain experience in the market.
All right. Thank you very much. Can I ask last question, Akil? I know, I always promise that it won't take more than an hour, and it always does. But it's a great conversation. It's a great conversation. I really enjoyed it, and I hope that, and I'm pretty sure that all of the audience who are watching are really enjoying this too. My question is, you are a trader, and you are an investor, and you're a coach, and you're a family guy, right? Is it
Yep.
hard to combine everything? How do you manage? How do you handle?
Lots of coffee. Excuse me. Lots of coffee. But yeah, it is tough, especially one of the biggest adjustments I made was when I started trading before I had a family. So I got good in trading because I invested like 12 hours a day into my craft, and I was just kind of like I shortened that learning curve by just spending time in the market, time in the market, time in the market. Once I had kids, a lot of that time that I would invest in the market had to be invested in my family. So that was really really tough. So something I really worked on over the years was just learning how to become more efficient and more productive with my time. So, implementing stuff like to-do lists, implementing stuff like I use something called a Pomodoro timer, where I have like these 25-minute segments where I need to only focus on work. So I shut off Twitter, I shut off the TV, shut off the cell phone. I hit the timer and then I just go crazy for 25 minutes, and then I take a break and I do another 25-minute segment and kind of space that out. And what I found that is being more efficient with my time, I can actually do the same amount of work that I did before in a lot less time. So where
Mm,
before I'd get distracted, it would take me an hour to do something, I can do that same task in about 15 minutes if I'm just fully focused. So still a work in progress with that. I still have a ways to go, but I've just invested a lot of time just learning how to be productive, how to be efficient. That's helped me in life. That's helped me organize myself as a businessman, as a family man, and of course as a trader as well.
that, that's really cool. That's great. That's great to know. Are you tough on your students?
Some of them, when I need to be. Different students are different. So you have some that you gotta give it to them. You got some that you gotta coddle a little bit. I can tell you this: I'm honest. I'm honest with them. So
Yeah.
I'll tell them this all the time, where it's like, hey, or I'm going to say this. I'm not going to say it to be mean. I say it out of a place of love. I say it to help you. Um, but I'm going to be honest with you. So I'm not a big yeller. I'm not a big screamer. I'm not going to virtually whip you or anything like that. But I'm gonna be honest with you. If you're wrong, I'm going to tell you you're wrong. If I sense that you're making a mistake, I'm going to grill you until that mistake comes out and you can admit that you're making a mistake. But then we're going to work on fixing it. So I'm going to tell you what you're doing wrong, but then we're going to talk about, hey, this is what we need to do to get it right, and then we're going to start on that path. So tough
That's
sometimes, but usually more not as tough as my mentor. My mentor was a drill sergeant, so
really
he oh yeah, he ex-military, so he was
okay.
yeah, he'd let you know about it.
And the tough part is that when you were studying, when you were doing, getting your mentorship, it
Mhm.
was one-on-one course, right? You were sitting in the same room, right?
So not for my investing mentorship. Yeah, for my trading mentorship was online. When I first learned about the stock market, yeah, I was sitting one on one in a room. What I wasn't learning at first, I was listening, and then I kind of won him over and was like, "Hey, come on, just I'm here, teach me."
Uh,
And then it became one on one, which is very valuable. But I had to earn my stripes because I guess he had to make sure I was worthy to be taught. So I sat and listened. I sat, listened, and watched and observed, and did that for a very long time.
that's good. And now there you are.
Yeah, the
You are
tables have
mentored.
turned, which is kind of cool how life works out like that. But I love it. It's fun. It provides value to my life. I don't think I tell you what I don't think I would enjoy. When I managed money, I didn't really enjoy managing money because I that value part was missing. I was just making money for people that already had a lot of money.
Mm,
I don't even think trading for myself would be as valuable. I think that the void that is missing is that, hey, you're doing something to give back. You're doing something that provides value to the world. You're doing something that can help future generations, and I think
yeah,
that's the most important part to me.
yeah, that's great. All right, I think we should wrap up because it's been a long journey, guys. Follow Akil. If you got inspired, get his course. Get Akil as a mentor. Definitely, like highly recommend. He's a top trader. He's the best, one of the best coaches out there. Whoever wants to learn how to trade, because you need to learn how to trade, right? We have a feature of a copy trading feature, which is absolutely great. But to improve and to evolve, to understand the market, you need to learn. And Akil is there to help you. Whenever you learn anything, remember that there is a demo trading on BingX with BST. Whatever you learn, almost practice. And if you fail, learn again and practice again, and you know, develop yourself, develop your skills and the psychology, and try. Without trying, just and Akil, am I right if I say don't give up? Right? It, you shouldn't give up. Try, study. If you fail, get a rest and then try again. Right?
Yeah, I would say this. I basically failed and struggled for 2 years, and during that 2 year period, it seemed like the longest 2 years ever. I'm
Well,
in my 15th year of trading now. So the good once you get it, and if you give up, you'll never get it. But if you keep fighting, you will. Once you get it, the amount of years that you can be successful and take advantage of your skill is going to massively outshine the years that it struggled. And sitting here with you today, that 2 years seems like nothing. Um,
yeah.
yeah. So yeah,
See,
don't give up. Keep trying.
keep trying, keep fighting, and
Mhm.
build that winning attitude
Yes.
and that psychology. Will develop, and you will be successful. Akil, if there is anything you would like to add, please go ahead.
No, I appreciate you having me here. Just good conversations, man. I love speaking with people who actually understand the realities of trading. As I'm sure you know, there are a lot of people out there that just want to
Yeah.
kind of sell you junk and sell you a dream. So it's always refreshing to have a good conversation. I will say to the people listening, don't feel afraid to reach out. If you have a question for me, just find me on social media. Make sure it's not a fake version of me. If I ever offer to manage your money or shoot you a weird link or DM you, it's not me. But if you have questions, yeah, I don't bite. You can reach out. I answer them. That's something I'm very proud about on social media. I try to interact with everyone. So don't be a stranger.
Thank you very much, Akil, and we look forward to seeing you again.
Thank you.
Thanks. Bye bye.